Today we're going to talk about risk planning, which in effect is insurance planning as it relates to the overall financial and life plan. You really need to consider when you're looking at and focusing on risk planning is insurance. Do I have adequate insurance? Do I have the right insurance policies? Do I need to reconsider what I have in place or what levels of insurance I have in place? Because all of the financial planning approach takes a look at your assets and what you're building, and the risk and insurance side of it is to assure that you're protecting those assets against some difficult situation that might arise in the future. So it's very critical to take a look at your insurance situation and your overall risk situation and analyze what your needs are and where there might be areas that you have to address or modify the insurance coverages that you have in place. From an insurance perspective, oftentimes as someone's being presented with insurance options, they're being sold products. So the needs that someone may have and the wants that they may have or the person selling the product may have could be different, and it is critical to assess and really analyze what someone really needs from an insurance perspective, as opposed to maybe there could be some alternatives to what they need, but there might be other ways to address those. So, for example, do you need a certain level of automobile insurance, and maybe you could increase that level, but you'd be increasing it against a very low risk that might be associated with that. Or maybe more applicable would be life insurance. Having a specific amount of life insurance to address what the needs of your family might be if something happened to you, versus having a much larger amount of life insurance that would make your family financially wealthy if something happened to you, as opposed to the fact that your current situation might be just a very basic financial standard. So you can address life insurance with what you really need, or you can really spend a lot of money and buy a product that would be way beyond the financial circumstance that you're in today. So it is critical to assess that and to really understand what your needs are versus what is just available out there on the insurance markets. What we do with our clients really is sit down from what I would consider an unbiased perspective, because we're not selling an insurance product, and if a financial planner is with you and they are not focused on selling a particular product, what the focus and objective should be is, what is your current situation? What are your true current risk and insurance needs, so that you can then begin to outline and assess what the best solutions to those needs would be, as opposed to really focusing on a product or focusing on a specific insurance strategy that might be available to you. What you're really doing is looking at your overall circumstance, assessing what you really need to protect, and then beginning to line up insurance strategies and solutions to address those needs. So trying to do it from a non-biased perspective, where there's nothing really being sold, you're really just trying to address what my needs are, what assets do I need to protect, and how can I make sure that the overall plan is intact relative to this specific issue of risk and insurance planning. We work with insurance professionals that will help us once we've kind of analyzed and assessed a client's needs. We will work with insurance professionals to propose different solutions to those particular needs that we've outlined. So ultimately, you've got to go into the insurance world and purchase the coverages that you need to address the insurance strategies that you've incorporated into your plan. But it's really critical initially to formulate those needs and to kind of put those ideas in place, so that when the insurance professional is presenting solutions to you, they're focused on the unique needs that you've outlined to them. They may have several different ways or approaches within the parameters of what you laid out to them, but you've kind of structured something that clarifies what you're going into. So for example, you might have determined that you need $1 million worth of term life insurance, and you don't really have the need to look beyond that from an insurance professional's perspective. So there's no need to address other insurance products that might be available in the market. You know that based on the analysis you've done with your overall plan, that you need that particular insurance coverage. So it's an assessment that helps to set the stage for the ultimate discussion and purchasing of the insurance products. I think by establishing parameters to what your insurance needs are, you'll kind of confine the discussion and the options to be specific to what your needs are. Certainly from the insurance professional's perspective, they may have some alternatives to how to approach those needs particularly, but I think it will keep things somewhat in tune with what the specific parameters you've established are, so that you're looking at insurance products that really fulfill what your requirements are and not going way beyond that. Certainly one of the key aspects to risk in insurance analysis is protecting your family, protecting your loved ones. What do you want to assure would be in place if something happens to you? If you get very sick, if you become disabled, if you pass away. Those are the things really that you're looking at when you're establishing your insurance objectives, and so that you can kind of outline what types of life insurance coverages you need, what kind of disability coverages you need, and within the limits of your overall budget, what can you afford to incorporate into your overall plan. So by really focusing on what your loved ones' needs would be if something happened to you, that can help to put together the true strategy that you need to address from an insurance perspective, and help you to then go out to the insurance professional and make the request for particular insurance coverages that you feel will fulfill the requirements of your overall plan. Part of risk and insurance planning today includes the whole aspect of long-term care insurance. It's somewhat of a new arena in the insurance industry, and it addresses the potential need for a long-term care type of health coverage that would not be covered by your general health insurance policy. And the determination within the overall financial plan that you're creating of the potential affordability to even address that issue, or the alternative ways to address that issue from strictly buying insurance. But really the long-term care insurance aspect is to understand what the potential issues are related to a possible long-term care need that you may have in the future, understanding what your family history and potential exposure to a situation like that may be, and trying to fit it in or incorporate it into how your overall plan is going to address those possible needs. And if an insurance product is the right answer, that may be the case, and you could go out and look at what alternative products are available for long-term care. Or you may find other avenues that are more appropriate to your specific personal situation and personal needs that might address that, such as saving money or setting money aside for those possible situations, or establishing estate or asset protection plans that might address those situations separately from utilization of a long-term care insurance policy. So it's more an awareness of that issue and that potential risk, and trying to assess it with what fits most appropriately into your own personal plan of either insurance or other strategies that could address it. A lot of the planning looks at the stages and tries to create kind of priority levels for those stages, but certainly from a big picture standpoint, this is kind of the protection layer above that kind of encompasses your overall plan. So you've established college planning or established financial planning, but you didn't necessarily incorporate into that things that will protect those assets from possible difficult challenges that you may face. And the risk and insurance planning really addresses that issue and says, if I'm going to put together a plan that builds college planning and financial and retirement planning into the overall picture, I need something that will protect those assets if something happened down the road that is unexpected or unforeseen. And so that insurance piece really kind of protects it. Kind of like buying an automobile. That's your asset you've created. Now you need to have the insurance to protect against an unforeseen circumstance that might occur with it. And the big risk and insurance analysis kind of does that for your overall financial plan. A little bit of the continuum of insurance coverage would come down to kind of the wants and needs that we talked about a little earlier, because for sure, generally you'd want to look at an asset like an automobile or a home and say, I want to make sure it's protected if something happens to it, that I could replace my automobile or I could replace my home. And that's probably a base level of coverage that you would look at obtaining. But you also might want to look at alternatives or other options that are associated with that, like having low deductibles or having higher liability coverages in case something occurs with an automobile or a home related to an injury or a physical situation. So you can begin to kind of layer on or add on to some base needs, and then it's going to be a function of affordability and having the money and being able to prioritize addressing those needs within the confines of the overall budget. You wouldn't want to necessarily expose other areas of the plan just because you're over-insuring your automobile or your home, but you do want to take a look at those areas and see what the affordability might be to obtain some extra coverages that would protect you against an unforeseen circumstance. And umbrella coverage is often an option to consider at a relatively low cost, and that type of policy really has the focus of adding on to or exceeding the coverage levels that you have in the underlying insurance coverages on your automobile or your home, so that if something did occur above or beyond the coverage levels of the underlying policies, your umbrella policy would address those potential liabilities that you might incur. Next, we're going to talk about estate planning and asset protection in relation to a long-term care insurance policy, but really taking the bigger and broader step of looking at all of your assets and all of your estate planning needs, including wills and trusts and powers of attorney. So all of the documents and strategies associated with a very strong estate plan component of the overall financial plan.